Now it's on, right? Yeah, it's on. So once again, welcome everyone. I thought that I will break the price action down from yesterday and the opportunities in the live session and not in a recap video or case study, etc., etc. So maybe it will be a better option. Let's see how it works. And why is there a new? I didn't pay my trading view. Yeah, fuck, I forgot to pay my trading view. Okay, I will have to upgrade it. So welcome everyone. This will be a quick live session around 20-30 minutes. And after the live session, I will send the markups for you. But let's just see yesterday's price action in a form of a breakdown. So yesterday I started, that was 18th of May. So it started right somewhere around here. Here was the beginning of the New York session. And that's the end of the New York session. So basically, this price action region was the New York session. Okay, what could we see on the chart? As I sent you yesterday, or the day before yesterday, price is reacting on a 5-minute supply zone up here. And after a reaction, price has aggressively changed character to the downside, as you can see, on several places. So here was a range. Price has created a range, a clear range, downside, upside range, before tapping into any higher time frame supply/demand zone. Price has swept the range upside first with this movement, as you can see. Here was a perfect first, second, third, fourth tap, 4 equal taps. And with this inefficient movement to the upside, price has swept the range. And after a range sweep, after the stop losses have been triggered, all of those stop losses have been converted into new orders immediately at this supply zone. And let me just show you this supply zone because that was the extreme of the whole movement on the 5-minute chart. So as you can see, if I zoom out, there was this supply zone, which was heavily part of the liquidity, but still price could change character on this supply after a tap of this supply. And as you can see, this supply zone up here wasn't really a valuable supply zone, but price still reacted on it. So let me just switch back to the 15-minute chart. So after the reaction on the supply zone and the upside liquidity range sweep, price has just reversed to the downside immediately and created a change of character here on the first place and created a strong change of character too, right here to the downside, as you can see. And basically that was the lowest point of the range, or we could even call this as a range low sweep because as you can see, these were equal bottoms. This candle has closed, a wick below the range. So basically this could have been a liquidity sweep. So the downside range has been swept first and the upside range has been swept later. So once again, after tapping into the supply zone, price has changed character here in the first place and created a strong change of character here to the downside, meaning a strong change of character on the 15-minute chart has happened, and shorts have been considered as counter-trend trade movements after this huge inefficient movement to the upside. As you can see, price has just created a huge inefficient movement to the upside and changed character on several places on the 4-hour chart. There was a buy to sell candle somewhere around here on the 4-hour chart, and there was the decisional supply zone right here on the 4-hour chart also. So basically on the 4-hour chart, price has changed character on several places, meaning a strong change of character has happened on the 4-hour chart also, which means the trend has turned into bullish on the 4-hour chart. Knowing the fact that the 4-hour trend is bullish, we can expect the 4-hour demand reaction, right? Let me just switch to the 4-hour chart. As you can see, this demand zone right here has started the character changing movement and the huge inefficient movement to the upside, which has changed the overall order flow to bullish from bearish. If this happens, we can expect a reaction, pullback and reaction on the last recent demand zone that has caused the change of character. And the last recent demand zone in this case is this one down here. Okay, so knowing the fact, combining all of the knowledge of the higher time frame and combining this knowledge with the lower time frame, the 15-minute chart, will be the strongest setup, because if price changes character on the 15-minute chart with a strong change of character on several places and continues the overall bearish order flow, we'll be able to take counter trend movements down to the last recent 4-hour demand level. That's our theory right here, right? So after the strong change of character line right here, price has just reacted on a demand zone, demand area right here, reaction on this demand area, and weak below this demand. But we could still consider this as a break of the demand because price is still closed below this demand zone with a body closure. If I zoom in, you'll see it better that price is actually closed below this demand level right here with this body closure, as you can see, and the huge wick, which has collected all of the liquidity from below this demand zone. But there wasn't any liquidity because as you can see, here's the first bottom, and this isn't the second bottom, but this could have been considered as a liquidity too, but also this candle has closed below this demand zone, so we could consider this as a full break, full demand break. So it wasn't just a liquidity sweeping movement, it was a full demand break. Okay, after this, somewhere around here, our session has started. But before this session has started, price exchange character to the upside on the 15-minute chart, as you can see, because this was the last recent supply zone that has caused the demand break to the downside and caused the overall liquidity sweep to the downside. And sorry, let me just close this ad. So yeah, this supply zone has caused the break of this demand zone. And after this, price exchange character to the upside, from this movement to the upside, as you can see, there was a change of character and also liquidity sweeping movement. Okay, we have two options here. I broke it down in yesterday's live session, so if you haven't seen that session already, please just check it, because I broke down every single price action region right here, that what could be the expectation order flow. And actually the expectation order flow that we were expecting has happened. It has happened perfectly, because I lined up maybe 2 or 3 scenarios for each demand zone slash supply zone, and one of the scenarios has played out. And basically all you had to do is follow the scenario. But I will talk about the weak and strong theory too, because it has played out perfectly, and some of you guys have been confused around the theory, and I will just want to explain it to you. Okay, inside of this character changing movement to the upside, we couldn't really identify a good demand zone on the 15-minute chart, because as you can see, all of these demand zones right here, I mean, all of these candles right here are efficient. These aren't inefficient candles, these are efficient candles. So a good demand zone at this region couldn't be identified. So I did switch to the 1-minute chart to actually identify a good demand zone at this region. As you can see on the 1-minute chart, we could have identified 2 valuable demand zones. The first one was this one down here, which has caused the first character changing movement to the upside, because as you can see from this demand zone, or even from this demand zone, price has started, sorry, what am I doing? So price has started the whole character changing inefficient movement to the upside, which has changed character right here. Okay, second demand zone, which is unvaluable. I mean, not unvaluable, but not as valuable as the origin of the change of character demand zone, is right here. And I marked this demand zone because at the beginning of the session, when I was making the markups, when I was making the live session, price has reacted on this zone, as you can see, and price has perfectly reacted and reversed on this zone, because it has swept liquidity, swept this double balance and this liquidity into this demand zone. And after the sweep of the liquidity, price has just reversed on this demand zone and started a bullish order flow to the upside. Okay, switch back to the 15-minute chart. So now that we identified that demand zone that has caused the first change of character here to the upside, we can continue with analysis. And let me just explain the theory right here, the weak and strong theory. So in theory, if this demand zone, if this downside demand zone, the origin of the change of character demand zone, can take out the less recent valuable supply zone, which is up here. Let me just remove. So if it can take out the less recent valuable supply zone, which is up here, then demand will be weak. So this was our first scenario. I said that if price can react on this supply zone, or either react and sweep the liquidity from above this supply zone, because as you can see, we had a huge liquidity line just above this supply zone. So if price can react on this supply zone, create a change of character, or it can react on this supply zone, sweep the liquidity, and after that it can change character to the downside, then the demand zone that has caused the change of character right here to the upside will be weak, because it couldn't take a supply out. If it can take a supply out, if it can take a swing supply out, then demand will be weak, because you are following the main trend. Our main trend right here on the 15-minute chart, of course, on the 15-minute chart is bearish. Why is it bearish? Because price has changed character here on the first place, change character, strong change character here on the second place, and broke below a 15-minute flip zone. This was our 15-minute flip zone. So it broke below our 15-minute flip zone, meaning it has 3 signs of changing the order flow from bullish to bearish. So all of the 3 signs has happened, as you can see, because change of character, demand break. So we can expect supply reactions, and we can expect short continuations over the long continuations to the upside. That's why I said, I believe someone of you has asked that why I'm not expecting the break of this supply and the continuation to the upside. That's why I said that I'm expecting a reaction on this supply zone, or either the liquidity sweep and after the liquidity sweep a reversal, because in theory, supply is highly in control, supply is fully in control. I mean, supply is strongly in control because it has changed character on several places and broke below a demand zone. So in theory, if this demand zone can break above this supply zone, that means supply will be fully in control. Because if this demand zone can take a supply out, can take a swing supply out, then more likely this origin of the change of character demand zone down here will be weak. So I've already explained this scenario in some of the recap videos. I will pin that recap video for you if you haven't seen that already. I've already explained this scenario. If a demand tap happens, if a first demand tap happens, if a first valuable demand tap happens, for example, like this, and price reacts on this demand zone and changes character on the 1 minute chart, and this push can take a supply out in a demand scenario, of course. And if this push can take a supply out, and if this push reacts on a supply zone and reverses on a supply zone, then the demand zone below this demand zone will be weak. And this demand zone is the one that's below this demand zone that price was just reacting on recently. So price has reversed on this supply zone up here, meaning that demand zone below this one, so this demand zone will be weak because it couldn't take a supply out. And if the first push couldn't take a supply out, then the second tap of this demand will be weak too, because if this demand zone, if the first demand zone couldn't give enough impact and the volume to price to actually break above a swing supply zone, then the downer area won't be strong enough to actually break above this supply zone. That's why I said that we can really expect the break of this demand zone, and we can really expect the continuation to the downside, and we can expect the tap of the 4-hour demand zone, which is down here. Actually, and the 4-hour demand zone hasn't happened yet, but price has broke below some of the last recent demand zones down here, as you can see. And I already said that some of you guys has said that, but why isn't this a demand zone and why it won't hold price? And I said that this isn't a demand zone because it has caused a huge, I mean, of course it's a demand zone, but it's not a valuable demand zone because it has just caused a huge inefficient push to the upside, and it has just reacted on this supply zone. And most of the times when price creates this huge inefficient movement to the upside or downside and prints like 50 or 60 pips candles, these will be broken. More likely these candles will be broken because price has to fill up the gap. Price has to fill up the inefficiency and actually restore the balance. And if price breaks below this candle, the balance will be restored. And of course, the second reason is that the price has changed character here on several places and broke below a strong demand zone. This was a really strong demand zone that has caused the 4-hour supply flip. So if this demand zone can't hold price and can't reverse price to the upside, then more likely all of the other demand zones, all of the decisional demand zones below this demand zone will be weak too. So this one will be weak too, this one will be weak too, and this demand zone will have chance to hold price actually. But as you can see, price is reacting on some sort of demand zone right here at this region, which was this weak zone right here. And I believe this was just a liquidity building movement, and price will actually reverse somewhere around here. Price is actually reversing on this supply zone that has been marked yesterday. And as you can see, this was our entry point yesterday. I will show it for you on the 1 minute chart. But from this supply zone, it has a high chance to reverse to the downside, sweep the downside liquidity, but the buy side liquidity right here, and tap the 4-hour demand zone, create a 15-minute change of character right here, and continue the overall bullish order flow. That's the plan. But that's just a pre-session analysis. Let's just get back to the actual price action breakdown from yesterday. And let me switch to the 1 minute chart. So, New York session has opened right here at this region. This was New York open, and this was New York close somewhere around here. Yes, this was New York close. So the New York session has lasted from this point to this point. This is our New York session right here. We traded this session. I traded this session yesterday, and I took 2 break-even trades yesterday. Let me just break down these 2 break-even trades. So the first trade has happened right here, because as you can see, this was New York open. This was New York open right here, meaning that every other zone in the less recent 1-hour price action right here at this region is a fake lunchtime zone. Let me just turn on those fake lunchtime zones. So all of these red movements are being considered as fake lunchtime areas. And as you can see, after New York open, prices perfectly broke about all of the fake lunchtime areas, perfectly liquidated and swept all of the lunchtime areas, swept this liquidity to the upside too. And which was the less recent valuable zone about the liquidity lunchtime area, about the liquidity zone? This one right here. This was the less recent supply area that price was just reacting on, as you can see. And this supply area wasn't part of the lunchtime area, so it was valuable for us. And of course, this was the origin of the whole character changing movement, because as you can see, from this demand zone, prices created a less inefficient push to the upside. After the less inefficient push to the upside, prices created liquidity right here. And from this supply zone, prices swept this liquidity to the downside, as you can see with this movement, and broke below this demand zone right here. Of course, the demand break hasn't happened from this supply zone. It has happened from this supply zone. but it was part of the liquidity. As you can see, this supply zone was part of the liquidity because as you can see, here's perfect triple taps. First tap, second tap, third tap. So the last recent zone above the liquidity will be able to hold price and reverse actually the sweep. And as you can see, price has just perfectly reversed on this supply zone. And after the reversal, after the strong rejection, price has just created a change of character here to the downside. That was the first trade idea. That was my first trade idea. Let me just mark this demand zone for the clarity. So that was my first trade idea. This character changing movement to the downside and liquidity sweeping movement to the downside, because as you can see, there was liquidity. Here was the first bottom, upside movement, downside movement, second bottom. So this could have been considered as liquidity also. And this supply zone has changed character here to the downside and swept all of that liquidity to the downside also, meaning a strong bearish impulse movement has started. What else criteria did this zone have? It had liquidity. As you can see, prices coming down, coming up, creating the first tap. Here was the first tap. This week is the first tap, coming down, coming up, creating the second tap. Another rejection right here, coming down, coming up, creating this week, which has created a pullback right here, because this week is a pullback candle, as you can see. Price was just coming up at this candle, reaching its high point, coming down, reaching its high point, coming down, created a pullback down to this weak candle and created an inefficient movement to the upside, which has swept the liquidity to the upside. And as you can see, here was the first tap, here was the second tap, here was the third tap, and this movement has swept the liquidity and tagged us into our trade. Because I opened the trade right here at this region, there was a trade for me with 2 pip stop loss, and this trade was a break even for me because I did set my stop loss to break even after I saw the break of the last recent low point, which was this one right here. As you can see from this candle, price has created another breakout structure here to the upside. This candle has closed above the last recent high point, meaning this is our last structural low point. And after this inefficient movement has happened to the downside, I just did set my stop loss to break even right here, which has been hit not by this movement because it didn't take me out. It got hit by this movement. So my break even have been triggered by this movement to the upside. And after this, price has just swept my original stop loss point, as you can see. So it would have been a stop loss if I didn't set my break even point. And after this, price has just went to my original direction. But this push to the downside wasn't strong enough to actually take the last piece of the demand out. As you can see, price has just reacted on the last piece of the demand and reversed to the upside, meaning the demand was in control at this region. But meanwhile, this movement has happened. This upside movement has happened. I opened another short opportunity because, let me just break it down. So I took a break even right here. And as you can see, price has created a range. Price has created liquidity right here. This was liquidity. This is liquidity and liquidity on the downside too. Price has swept the upside liquidity first. So there was the range. Price has swept the upside liquidity with this movement. As you can see, this movement has swept the liquidity from about these weeks. And after a liquidity sweeping movement to the upside, price has just reversed to the downside and swept the downside liquidity. But I did not pay attention to the demand reaction right here. And I just opened the position on a supply trade. Actually, I did pay attention to this demand reaction, but I was so sure that price will continue the bearish movement and won't continue the bullish movement that I was literally opened the position right here at this supply zone. Because as you can see, this supply zone has caused the liquidity sweep. Price has just reacted on the last piece of demand right here. Not last piece. This is the last piece of demand. This is the last recent demand zone. So price has just reacted on the last recent demand zone at this region. There was a reaction candle. That was a reactional candle because as you can see, price is coming down, coming up, reaction, and from the supply zone, prices split this demand zone and slap the liquidity. So for me, this was a really, really strong opportunity and powerful opportunity because prices swept the upside range that mitigated the higher time frame supply zone. Because this was actually a higher time frame supply zone. This was lined up with a 5-minute supply zone also. And first character changing movement wasn't enough because it couldn't collect enough liquidity. Second character changing movement has happened after the liquidity collection. So here was the second character changing movement to the downside after the liquidity collection from the upside. So this movement has collected liquidity from the upside right here. After this, from the supply zone, price has collected liquidity to the downside, from the downside too, and created a change of character. So sorry, I meant to mark it as a change of character. So yeah, the only missing piece was the liquidity creation for this zone. So there was no liquidity creation for this zone, as you can see. So yeah, it has happened. I was in the position, and after this low has been broken, I did set my stop loss to break even. because I saw a strong reaction on this demand zone down here. And as you can see, price has just reacted on the last recent demand zone. With this movement, price has tagged me in. I have a limit order on the full body of the, full week, because I usually use full week entries and not the 50% of the week. I use the full week entry. I was targeting the 4-hour demand zone down there. And after this movement has happened, price has just reacted strongly on this demand zone and just swept me out from the trade with break even. Okay, that was my second trade opportunity, which has been break even again. So 2 break even so far on this day. What can we see after this movement has happened? We can see that price did hit our original supply zone that we were expecting to be hit, because as I said in the live session, as I said in the pre-session analysis session, I was expecting this supply zone, this higher time frame 15-minute supply zone, to be hit, which has liquidity above. And as I said, there are 2 scenarios for this supply zone. The first one is the strong criteria character on changing entry right here without the liquidity sweep. So strong criteria entry somewhere around here. Second scenario, if price mitigates the supply zone, sweeps the liquidity and reverses to the downside. That was the second scenario. And the second scenario has happened, as you can see, because price has mitigated the supply zone. And with this inefficient movement to the upside, with this weak movement to the upside, price has just swept all of the liquidity from above this region, as you can see. First, second, third, fourth, fifth up, swept all of this liquidity, which has been perfectly lined up with the supply zone. All of this liquidity have been swept. This was a liquidity sweeping candle on a 15-minute chart too. Let me just show you that 15-minute liquidity sweeping candle. So as you can see, it's a perfect liquidity sweeping candle. And after this reversal has happened, and let me just go back to this price action region. So the reversal has happened, and I did count these inside bars less recent demand. So this was the last recent demand zone for me. And as soon as I saw that price broke below this demand zone, I just did set my limit order on the 50% of this candle, because that was the origin of the whole inefficient movement to the downside and strong change of character. As you can see, first change of character, second liquidity sweep, third change of character. But the mitigation of this supply zone hasn't happened at that time, so it hasn't happened in the session. But right now, the mitigation of this supply zone has happened, as you can see, and this proves that this supply zone is still pretty strong. So if you have a strong supply zone, sorry, these ads are so annoying in the corner. So it proves that the supply zones that you're marking out are actually strong, and if they are not getting hit in the session while you're trading, those will be still valuable. So you don't have to delete these supply zones. You don't have to delete these demand zones from your chart, because these supply and demand zones will be valuable. These are still valuable zones, and price has a chance to mitigate these supply / demand zones later, which has happened, as you can see right now, because price has just mitigated the supply zone, perfect mitigation of the supply zone. Here was the first step, liquidity creation, some sort of seconds liquidity creation on the second chart, sweep of the liquidity and instant reversal to the downside, change of character here to the downside, change of character here to the downside, liquidity creation for the zone that has caused the change of character, and there will be a perfect entry opportunity for us in New York session. So I will send this opportunity with the markups. This will be a really cool continuation opportunity to the downside, and our final target point will be the demand zone, the 4-hour demand zone at this region. So I will send the markups about this opportunity and price action breakdown, but let me just continue with the session breakdown from yesterday, because there's still one more interesting piece of this session which needs to be broken down. So after this initial movement to the downside and character of changing liquidity sweeping movement, price has just stepped and mitigated the last piece of demand zone that I was talking about down here. So as you can see, I still kept this demand zone on my chart. So let me just drink a sip. So price has still mitigated this demand zone, because I still kept this on my chart, because it was still valuable. Even if price had just moved so far away from this zone, it means that you can't set an order limit on this zone, but it's still valuable. It's still valuable and it's still there. And as you can see, price has reversed on this supply zone, demand zone. Price has mitigated this demand zone. But as I said, in theory, if price can change character on the last piece of the swing supply, and this demand zone, this overall demand zone can take the last recent 50-minute supply out, then this demand zone, this origin of the demand zone, will be weak. So we can expect the break of this zone, and we can actually open a position after mitigation of this demand zone. Because in theory, this is weak. This demand zone isn't a demand zone because this demand zone couldn't take a supply out. And supply is in control because this supply zone could hold the price, could hold the volume of this demand zone. So let me just break it down once again. This demand zone, switch to the 5-minute chart, it will be much cleaner. where is it? Right here. So this was the 5-minute demand zone right here. This 5-minute demand zone wasn't strong enough to break above this supply zone, this last recent 15-minute supply zone. And this supply zone was being able to hold the volume of this demand zone. It did hold the volume of the demand zone and reverse the price immediately to the downside with a huge inefficient push. So if this scenario happens, we can expect that the last piece of the demand zone, last 1-minute piece of the demand zone will be broken even if price reacts on that demand zone. So after the reaction on this demand zone, you can't really open a demand trade because this demand area couldn't take a valuable supply out, and the supply has just give immediate reaction and reverse price to the downside and change character on several places. So at this scenario, if this scenario happens once again in the future, and actually these scenarios happen pretty often in the future, will happen pretty often in the future. So if this scenario happens and price reacts on the last piece of the demand zone, and the demand zone couldn't take a supply out, couldn't take a valuable supply out, that will be meaning that this demand zone, last piece of the demand zone, will be weak. Actually, I had a limit order on this supply zone up here. I did set a limit order in the supply zone at the 50% of this candle because I didn't really care about the reaction on this demand zone for the reasons I just explained for you, because this has proven to be weak. So this isn't a mitigation. I mean, this is a mitigation, but this will be a weak mitigation and supply will take over control. So I did set a limit order on this candle, but session has ended for me. As soon as price reached inside of this POI, I just deleted my order somewhere around here because the session end was really, really close. So at this candle, session closing was 5 minutes away. So I did close my position right here. I didn't really open this position and it went direct to my direction. As you can see, it broke below this demand zone. And it could have been a really, really good entry opportunity, as you can see, because prices went down straight almost to the 4-hour demand zone and continued the huge bullish movement to the downside. But this has been missed. I mean, not missed because it was still on my map. I still mapped out this supply zone. I still mapped out this trade, but I followed my rules. My rules are stronger than my emotions because I have my rules. I'm thinking with my brain, and my rules are made with my brain, not with my emotions. And if I follow my brain, I follow my plan, I won't be listening to my emotions. My emotions told me that, hey man, just open this trade because you don't have to care about the session closing. You know, you can skip your rules one time. But my brain was stronger because my brain told me that, hey man, stick to your fucking plan, and you have to stick to your plan because that's why you're trading. If you don't stick to your plan, you'll be lost in the markets and you'll be fucked up. And yeah, I did stick to my plan. I didn't open this trade, which was completely fine because you always have to stick to your plan, even if you're missing a trade. You don't have to care about if you're missing a trade because you have to stick to your fucking plan. That's the main key. That's literally the main key of trading. Sorry, I can't speak. So yeah, actually, this was this session breakdown from yesterday. I believe I broke down every single price action region inside of this session. And I will have to end this session. I have to end this live webinar pretty soon because I will have to send the markups and I have to make the markups. So just one quick question. If you have any questions, guys, I will answer one question. Or everything was clear, everything was understandable.
Yes, sir.
Was it understandable or no? Okay, perfect. So if there aren't any questions, I will end the session soon, but let me just ask you some other things from you. Is it a better idea? Should I do this more often in the future, that I host a live session to break down a session and not just create a case study, for example? Because I believe it's more interactive. I can explain more things. You can ask more things. And if it's helpful, then I will host more sessions like this in the future instead of the, for example, case studies, instead of the recap videos. Okay, I will host more of these in the future. Perfect, guys. Thank you. That could be considered as liquidity. But you know, the whole chart was just liquidity. And this movement has created a strong inefficient movement to the downside and strong entry criteria. So this could have been liquidity, of course. You could have been swept out from this trade easily, but you have to risk it. If this supply zone can't hold because there's liquidity, then next recent supply zone will hold. And as I told you, you can set a double limit entry order, for example, like here and like here. Can you explain the difference between a weak change? There's I've created already a webinar, so please just check that webinar in the Telegram channel. Literally, the name is weak change of character and strong change of character. Take the risk or exactly. Take the risk or lose the chance. So hey guys, I will stop recording now.